Hey everybody, Kelly Weber with the Bergen Realty team at Keller Williams here today with Jonathan Rosen from Rosen CPA LLC. Jonathan, thank you for spending Thursday with me.
Thank you for having me.
Oh my gosh, you're welcome. So let's jump right into it. So tell me a little bit. You are a two-state, you have a two-state two office state. So you're in New York and in New Jersey. So tell me a little bit about your locations and where you're located in the states and what you do.
Yeah, so we have a location here in Ordell, New Jersey. We do personal income tax preparation, corporate tax preparation, and trust tax preparation. And we're really tax advisors that prepare tax returns for people. So we're always trying to focus on what's happening in the current year and how can we improve what's happening, or if we are set up the right way, making sure we stay set up the right way going forward. Our other location is in Greenwich, Connecticut, so we don't actually have anything in New York.
Oh, I'm
So we skip
sorry.
over that. We skip over that state. We just drive through it on 287. Most of the staff spends their time in Greenwich. I'm really the only guy spending time in New Jersey because I live here, but we're fully licensed in the state of New Jersey and Connecticut. And for, tax preparation, we essentially have national mobility. So it doesn't really matter where our client is located. It's just when we're doing financial statements and giving them to banks, things like that, that's really confined more so to New Jersey and Connecticut.
Gotcha. So I apologize about that. To me, everything over the Tappan Zee is New York.
Makes
So
sense.
that's great. So you started in Connecticut and have migrated down here because you live here now.
Yeah, essentially. So I started by merging with a gentleman who's now retired in the state of Connecticut and kind of took over that office. And we have a fair number of clientele that are out there, and we still have more clientele coming from there. And I've always resided in New Jersey and wanted to set up shop here. So we have the New Jersey location and just growing this client base,
That's
gradually and quickly.
amazing. Go where the
Great.
business is, right? Why would you give up something that's really good, but you're also growing the business down here? So that's awesome. Who is your ideal client? Like, who would you say, if I wanted to hand somebody over to you or refer you? I know you mentioned a couple of different things, but who would be your best client?
Best client would really be like an optometrist or a dentist with multiple locations and who needs to implement a tax strategy, for their operating business, but maybe is also accumulating personal investments like rental real estate
Okay.
and, stock portfolios, and who knows what his or her spouse is up to, right? Because that can matter as well. But they really just want to know that their accounting is in order for the purposes of going to the bank. Maybe they need a line of credit. Maybe they're looking to expand, right? So they need good, solid numbers to work with banks, and they need to know their numbers so that their estimates are all set up correctly, and they know that they're doing things the best possible way, where they're not, overpaying their taxes.
Right. That's awesome. And that seems to be a common theme these days. Nobody wants to overpay, but I'm sure you have some people that don't want to pay. Do you have people that show up and just have said to you, here's a pile of work that I haven't done my taxes in 5 years?
Yeah, so it's funny after our meeting this morning, I got a call from a 5-year non-filer.
Wow. I mean, and now I have to imagine that is so time consuming going back in time and trying to figure all that out.
Oh, yeah, it can be painstaking, and depending on the records that the client's kept, you're really kind of starting from ground zero, where the client will tell you this is sort of what I think is going on, but then you have to get those records and then really put your accountant hat on and say, okay, well, this is really what we're dealing with here. And you have to brace that person for the fact that if they really want to go down the road and clean it up and be a member of the Girl Scouts going forward, the cost is going to be significant.
I was just going to say, I got to imagine everybody thinks they could put it off, but eventually Uncle Sam catches up to you and they want their money.
Yeah, and sometimes it's the bank too, right?
Yeah.
Well, we want a mortgage. Where's your tax return? We need an income tax, transcript from you saying that you filed and
Hmm.
that you don't have a federal tax lien. Well, we never filed a tax return.
Yeah.
No
So
mortgage for you.
That's unbelievable. So you do both personal and businesses, obviously.
Yes, that's correct. So sometimes on the personal side, um, you know, it depends what people are looking for. If they're looking for that strategic tax advisor and they're willing to, invest in that service, we can be a great fit. Oftentimes we'll do like hedge fund partners or law firm partners where they're getting really complicated, what are known as K1 packages. And it's really, kind of up to us to decipher where do all these numbers go.
That's amazing. So, you said use the word advisor. A lot of people just say I'm an accountant. But I've known you for a while, and you always say, "Listen, I'm a tax advisor." What is obviously advising? So, if somebody were to go and want to purchase a new business or wanting to purchase a new property, they would seek you out first to say, "Hey, listen, let's go over our finances. How do we set this up?"
Yeah, essentially that's exactly right. They would say, look, I'm looking to put $1 million into this new business venture that I'm starting. I found space I can lease. I found space I can buy. This is what I'm trying to do. What are my options here of how to do this correctly? And they might say, I have two or three other partners, and they might say, how should we be taxed, right? Should we be an S Corp? Should we be a partnership? Should we be a C Corp? These are all the right questions to ask when the business is being formed. There's really 2 years that are the most complicated, generally speaking. Number one is the year the business is forming and money's coming in, and all these important decisions are being made. And number two is when people are exiting from the business, via retirement or death or liquidation, whatever it may be. What are the tax implications of the exit? Because that's when a lot of skeletons come out of the closet.
I mean, this is all very interesting to me because I'm sure I am not alone in saying this. I think of an accountant, I think, all right, I have to get my taxes done before April 15th, right? April 15th. And then I don't think about it to the following year. But like you're saying, if somebody's looking to a lot of entrepreneurs looking to set up a business, S Corp, C Corp, LLC. I mean, those are all questions that need to be answered to get off on the right foot. So you would be a great start for someone.
Absolutely. And the list just goes on and on nowadays when people say, now I have employees,
Mhm.
we want retirement plans. What do we do? It's a whole nother set of questions.
Wow. Again, I'm learning as much as you're explaining this here to me. What about, I mean, do you actually change classifications from, an LLC to a C Corp or to an S Corp? Do you look at the taxes? And again, I'm asking for myself, and I'm sure other people are thinking the same thing. Do you look at a tax return and say, hey, this is no longer benefiting you. We need to do this?
Yeah, absolutely. So those are really the core questions, right? How should we be taxed and why? So an LLC is just a legal entity, right? It's
Hmm.
been around, I think, since the 70s, an LLC, and they're organized at the state level, right? So when you form an LLC, maybe to buy a rental property like you do, you
Hmm.
go to the state of New Jersey or maybe Delaware, wherever the attorney says, maybe Texas. You form the LLC, you have your membership interest in the LLC. You purchase the rental property is owned by the LLC. That LLC, typically, when it's a rental property owned by one person, is what's known as a disregarded entity. In other words, you're reporting that income on your personal tax return on the Schedule E. The LLC is not filing a separate return. When an LLC files a separate return, it has a couple of options. Number one is to elect to be taxed as a partnership, which would be the default classification if you had a partner in that rental property. So, for example, two people go, 500,000, 500,000 on $1 million property. It's probably the right way to do it. Um, for real estate, you really would not go down the S Corp or C Corp route. If you had an operating business, like a dental practice or your real estate practice, for
Hmm.
example, or you're getting commissions, right? And that's self-employment, right? It's
Right.
it's not passive income. It's active income you're involved with. You may want to look at the S Corp route. And depending on how many owners the entity has, that's going to influence if you decide to go that route. LLCs can elect to be taxed as S Corps.
Okay.
So that's a new thing. When S Corps were first started, it was really just If you were, Kelly Weber Inc., you would have to be an S Corp or a C Corp.
C Corp.
Um, right? And the default would be a C Corp until you decide you're an S Corp. Then they decided, well, now, okay, LLCs can elect to be taxed under subchapter S or under subchapter C. You just have to file a couple of forms and then update all your internal paperwork to make sure you're walking and talking the right way, which is always a big issue.
So it sounds like it's all about, minimizing your taxes and maximizing your income minimizing taxes. Yes. And we'll work.
Essentially, that's
Okay.
what the client's always looking to do.
Yeah. It doesn't always work out that way.
Hopefully it does.
Yeah. Okay, so that's great. So give me a few other examples of smaller businesses. You said dental practices. Give me some others that people watching this can say, "Oh, well, he may be somebody that's great for me." Because honestly, everybody I know that uses you raves about you. They say how, competent, how thorough, and how amazing you are. So I want to make sure that we're getting you as many people as possible.
Oh, that's great. It's really anyone with a small business who's dedicated to doing things the right way and wants to understand, who do I need to surround myself with to make sure that this doesn't become a headache for me and I can just focus on doing what I do best, which is operating my business.
Business.
And I know that I have someone who's going to say, hey, things seem to be going really well here. You have a lot of net income at the end of the day. Maybe you should consider, you know, being taxed like an S corporation, or maybe you should consider setting up retirement plans for you and for your employees. But you have so much income, maybe you want to set up a separate company and run a separate set of benefits
Hmm.
just for yourself. And you want to have another set of benefits, which still could be very good benefits, for your staff. So maybe you want to set up a defined pension plan to defer more income. Maybe you want to
Awesome.
have a separate 401k, separate health benefits. You want basically, you bill out the income from one entity into another. That's what's known as a management holding company. That's what people are really talking about, right? Trying to squeeze more juice out of the
Right.
fruit.
Gotcha. And I have to imagine that you work very closely with financial planners.
Oh, yeah. Oftentimes we'll work with financial planners and they'll tell us, well, what if we want to convert this amount of money to Roth? What's that going to do? And we'll say, well, here's the tax bill, but don't forget about the additional Medicare tax bill, right? If the client's on Medicare, you have that hidden Medicare income related Medicare adjustment. Um, you know, that Social Security reduces the retirement benefits by.
Well, this is all amazing information.
You
So,
can't win.
what?
You can't win.
Yeah, I'm sure you could try, but Uncle Sam's always going to win. Well, listen, I thank you for taking the time with me today and giving us an overview of your business. I cannot highly recommend you enough. Like I said, I have many people that, we're in a networking group together that work with you on a regular basis that rave about you. Our trust attorney absolutely can't say enough wonderful things about you. So anybody looking for a CPA, Jonathan Rosen's your person. Thank you so
And
much
I'll
for,
make a final point for those
yeah.
people watching in New Jersey at this point or any high tax state. You really want to make sure that if you can do it, you're paying your state income taxes, through your business using what's known as New Jersey Business Alternative Income Tax. Because for a lot of clients, their income is probably over $600,000. And if you're in that point, you're probably leaving a lot of deduction on the table if you're not doing that.
So New Jersey Business Alternative Business Tax.
New Jersey bait, like fish bait,
Oh, 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 New
BAIT.
Jersey bait. Sorry.
Business alternative income tax. In other words, an S corporation or a partnership can pay the state income tax on its business income at the business level instead of the personal level. And that's a deduction on the federal return. And the partners or shareholders get a credit on their personal return for the tax that's paid at the state level. It's a deduction on the federal return. It's added back to the state return, but it's significantly better than letting all that income flow through to your personal return and paying all the tax on it and having the deduction limited to 10,000 on the federal return. So that's, if someone's not doing that or they haven't been advised about that and they should be, that's a home
Do
run where our fee will pay for itself.
Oh, that's awesome. So we are going to talk about that. So that is that something, is that new? I mean, again, I'm not proficient with things.
New like 2019, 2020 new.
Oh, okay. All right. So,
Yeah.
okay. Here's the thing, while my husband doesn't do what he's not a CPA and he doesn't do our taxes, which now you will be doing them. I don't really think twice about it because it's handled. But this is all great information and stuff that we all should know,
Yeah,
especially business
exactly.
owners. That's great. So look at this. You already saved all these people a bunch of money.
I hope so.
So I'm going to put your contact information below. It'll be in all the social media posts. So please reach out to Jonathan. You won't be disappointed. And Jonathan, thank you so much for meeting with me today. I appreciate it.
Kelly, you're amazing. Thank you for having me. Have a
Thank
good
you so
afternoon.
much. You too. Have a great one.